you know, I really definitely want to hear from all of you and the things that you'd like me to touch on. So there's going to be a Q&A in there, but I'll start out just by giving you an overview and it'll give I guess a backdrop for you for the things that we want to cover today. So with that, I'm going to go ahead and share my screen and open up the PowerPoint presentation. So please bear with me for a moment. Can I get a thumbs up if you can see my screen? Awesome. Okay. All right. And I need to move this down so I can get at it. Right. Awesome. Okay. So I'd like to, I guess, start out by, let's get this moving here, to talk about some questions that we hear a lot in the marketplace. With all the changes that have been taking place with shortage of inventory, some rising interest rates, these are some of the questions that we've been getting from buyers out in the marketplace. Will the strong buyer demand we've seen over the last 2 years continue? Anybody on the call today had that question, or here's somebody ask that particular question? Are home prices in a bubble that's about to burst? Well, not too many years ago, we did have something like that happen, and are we on the verge of that happening again? Isn't a lack of affordability about to crush the housing market? Probably everybody on this call, either personally or somebody that they know, has been in the market to buy a home, and they've talked to folks that maybe have been part of a multiple offer situation, and they didn't get the house. And they even offered over asking price, and they didn't get the house. So where's that going to go? How's that going to impact us? And then most recently, mortgage interest rates been rising, and is it better to wait for to move into that housing market and wait for them to come down? So these are some of the topics that I'd like to touch on, and also answer any questions that you might have that are surrounding the local housing market. But before I do that, I'd like to show you some information that I think you'll find helpful in understanding what's going on in the market. And so this isn't my research. This is from people that are following the housing market year after year. And this is showing what the projections are from Fannie Mae, Freddie Mac, which they deal with the secondary mortgage market. They're tracking it all the time. The National Association of Realtors, and also the Mortgage Banking Association. And so this is what happened in terms of home sales in the country in 2021, and this is what they're projecting for 2022. And other than the Mortgage Banking Association, you can see that they're all in that 6.6 to 7 range, which is relatively about the same as 2021. And these are the projections, and 2020 was 6.5, so still in about that same range. To me, it begs the question, well, they've got economists that are on their staff watching these statistics, watching it year over year, and even in spite of the low inventory, and we'll talk about that on a local level, And even with rising interest rates, they're projecting that the home sales are going to continue at about the same pace for 2022. So encouraging, because housing represents about 17% of our economy, which is a huge amount. In fact, the Wisconsin Realtors Association several years ago did a study, and in that study, they determined that for every home that is sold, it generates about $72,000 to $75,000 in our economy. And in terms of other things that take place because of it, it's kind of like tourism, right? When people come to the area for an event, the fact that they're here and they're going to cause other things and other sales that are going to help our economy. And the housing industry is something that affects all of us. The next one, are on home prices, and a little more conservative here. And again, we've got experts in all these different, fields that are following those statistics. And they're saying on average, we're looking at about a 5.1% increase on home prices for 2022. That'll be interesting to see how that plays out, because in our local market, in 2021, we saw 13%. And the year prior to that, we saw 11%. So we've seen a 24% increase over the last 24 months. That's really robust growth. And my opinion on this is that our market was lagging behind a lot of other areas of the state for so long. And as a result of that, there's some additional activity that was pent up and is causing it to actually pace faster than some other areas in the state. So again, they're looking at an average about 5.1%. Anybody have any question on either of those slides, either the home prices or the activity for the projected activity for 2022? All right. So housing affordability. The National Association of Realtors and also the Wisconsin Realtors Association have a tracking system which is called the Housing Affordability Index. And the components of that are this. They take the median income for the county and the median home sales price and where current interest rates are at, and how much of that median income does somebody need to be able to afford to get a 30-year mortgage to buy the house at that median price. So most lenders, end up, using kind of as a rule of thumb, about 25% of your gross income to go to principal, interest, taxes, and insurance. We'll call that your monthly investment or your payment. So in a market where all those things were just in line with the median, that would be 100% affordability. If the incomes were lower and interest rates are higher and housing prices are higher, it's going to fall below that 100% in terms of the affordability index. Well, this is 1990. And at that time, that index, and they've been tracking this for years, was at 108%. Now we'll contrast that in 2009 to 2015, because of the economic and financial crash in the markets in 2007 and 2008, And a lot of people, unfortunately, lost their homes following that. There were a lot of distressed properties on the market, foreclosures. And so the housing affordability index went way up because what happened? Prices went down because there were so many properties on the market at that particular time. So the highest in our country, the housing affordability index has ever hit, going all the way back to 1990, was 197%. And I'm going to have to move something here so that I can see the rest of the slide, because I have your smiling faces covering part of my, there we go. Right now, at the end of 2021, the housing affordability index was 151. So still very, very strong. And I checked this morning for the state of Wisconsin and for our economic area, and it was at about 182. So even though there's been a rise in the interest rates, it still represents a way more than reasonable portion. And even though there's been a rise in home prices, based on our median income for our county, we still have a very strong housing affordability index, especially compared to the rest of the country, because that's at about 150 and we're at 182. Yeah. So this kind of goes just in a different portion of it. Remember when I was talking about the national payment of income ratio? So that would be that 25%. So based on the income over the last 25 years, people needed about 23.6% of their gross income to take care of their housing needs for their, we're talking now home ownership. If you're looking at over the last 5 years, that actually dipped down to 20%, which is a positive. They didn't have to use as much of their income, right, in order to get the loan that they needed to afford the house that they wanted. So what would have caused this over the last 5 years? Somebody take a guess.
Increased incomes?
That's definitely a factor, yes. Yeah, thank you for that comment, Sean. Anything else that might have caused it in addition to increased incomes?
Lower interest rates.
Yep, you're absolutely right. The combination of those two things. So today, it's still tracking right around that 20 mark. And for two reasons. Even though interest rates have gone up some, so is income. So it's tracking about the same. So when you hear somebody saying, well, we're just being priced right out of the market, or that there's going to be a crash, there's definitely going to be a downturn in values because of that. Not so much. It's still in balance. All right, let's see here. So then there's the rental side of things, and single family rents hit at a all-time high in 2021 in terms of increases. Generally, rents were tracking in that 3 to 5% range of increase. So if somebody was paying, let's say $600 a month, they might be looking at a $30 increase. Okay. Well, this is fascinating to me, and I really can't quite put my finger on why this is happening, because you would think that if people are migrating from renting that and going into home ownership, that it's going to create a bunch of vacancies, which of course then is going to have an impact on the market, and landlords aren't likely to do any increases in rent, especially if they're sitting with vacancies or it's a real competitive market. But crazy as it is, there seems to be a shortage on rentals too. So that's what's driving up the prices on rents. So locally here, we still, have a need for additional units. If any of you have employees that might be coming into the area, you probably have heard there just isn't much available, or there's a limited quality on what is available. So those are, that's, and it's not like we've had a real big boom in an increase in population. Maybe everybody's moving out of mom and dad's house. I don't know what it is, but there's definitely a need for additional housing, even on the rental side of things. Now, this is, I think, really a very, very telling graph. And if you're having a conversation with somebody, and I'd be glad to share any of these slides, with the group. But look at the interest rates going back all the way to 2016. The yellow one is where things have been tracking. And this doesn't take it all the way into 2022. I didn't have that information available, but right as of last night, interest rates were at 4.25% on a 30-year fixed rate mortgage. So that means that this line for 2022 has jumped up quite a bit. But if you look at going all the way back to 2016, so we'd be looking at, a 6-year period, it still is well within that range. We've just had historically low where it was actually under 3% for a period of time in 2021. And another slide that shows it over a period of years. So going all the way back to 22 years ago, when interest rates were at 8.05, so right around 8%. A little history on this, and I have enough gray hair and time in the business to go actually beyond that 2000 mark there. I can still remember a heading in USA Today that said interest rates have plummeted to 12% by today. Now, that sounds crazy when interest rates have been under 4% for many, many years now. But there was high inflation, and there was at one point they had hit 17%. Now, and I'm not talking on your credit card now. I'm talking about on home mortgages. So that's, I really don't think we'll ever go back to that kind of an extreme. But the Federal Reserve for many, many years has been holding interest rates down because it spurs the economy in so many different ways. So they're with the inflation that's going on in the marketplace, and they're allowing interest rates to go up a bit in order to try to slow some of that inflation down, but not to the point where it's going to shut things off. So again, a little history here that hopefully can give you a perspective. And before we go into a Q&A and some statistics on our local market that I think you'll find of interest, I wanted to share this slide. There was a survey that was done of home owners in 2021. 33% of them said that they realized they want a different home and different features, and they're finding that they're spending more time at home than they have in the past. Well, hello, the pandemic, right? I mean, and what happened as a result of that post, and even though we're still in it, what are some of the changes that you've seen with people that you know that have jobs and maybe worked for a company that has gone through that and had people working at home? Anybody on this call, did their situation change with how often they had to go into the office and whether or not they needed to actually be in the office?
I personally know many friends that work for larger companies that instead of being in the office 5 days a week now, they're only in there 2 days a week, and then they work 3 days a week at home. So they've hybrided to be more accommodating to schedules. Right.
Even companies like Renaissance right here in our market, there's a lot of that building that is not filled. I have a good friend that works for an engineering firm, and they for years had fought the remote working. They just felt it wasn't as conducive to collaboration and productivity and those types of things. And they were forced into keeping everybody out of the office as a result of the pandemic. And on the other side of it, crazy this may seem, they found that productivity actually went up for their engineers, not down. And there's all different factors there. You know, people may have worked more than they did in the office. They may have had, you know, more collaboration as a result of the Zoom calls and that type of thing, and meetings that were, there's so many factors, but it's changed. It's changed a lot. So with people spending more time in their homes, they're reevaluating, does their home still fit their needs? The one on the top right, they say that their home no longer meets their family needs, kind of fits in with that. Bottom left corner, 32% wanted to move closer to friends and family, and now they can, especially if they work for a company that allows that type of flexibility. 23% are looking for a home office, where before the need wasn't as great. So these are a lot of factors that are driving the housing market. So some local market insights, and then we'll go into a Q&A. Again, I'm just gonna close there we go. So this is what's happened over the last 10 to 11 years. And I can tell you prior to 2012, it was fairly flat. This is specifically for our greater Wisconsin Rapids area. It is the average sale price for residential property in our market area. And as you can see, there's been a steady increase year over year, going all the way back to 2014. Whoops, I thought there was another slide, but there we go. Number of homes sold. the again, just to give you a sense, now these are actual housing in our greater Wisconsin Rapids area. And by that, I mean, it's not just limited to the city of Wisconsin Rapids. It includes the town of Grand Rapids, Saratoga, Port Edwards, Nakusa, Vesper, Rudolph. So what we would call our greater Wisconsin Rapids area. What's very surprising to me, and I don't know if you can see my cursor on the screen or not, but even with the declining number of homes available, the number of homes sold still increased from 19 to 20 and from 20 to 21. This one really surprised me. I really thought that it was going to be a little less than 2020 because there's such a shortage of homes available for home buyers today. Right. All right, so what questions do some of you have about the housing market?
I have a question for you, JR, about the housing market. So one of the things in working on housing projects more recently is seeing data that indicates that, you know, some of the younger adults coming up want some of the same things that maybe the older adults like, for example, a smaller footprint, being closer to amenities, you know, kind of things to do in the area. And I'm just wondering, in terms of demand in the Wisconsin Rapids area, are you seeing any of that kind of movement away from the traditional single family, you know, larger home on a larger lot size, you know, maybe what was, you know, really popular from maybe like 2000 to 2010? Have you seen any of that trending? And I guess another question on that is even universal design, you know, historically used to be very much, you know, for people with physical limitations and things like that. Whereas now it's, you know, becoming more of a amenity, you know, for people with young children and things like that. Some of the aspects of universal design, kind of a wider range of people are seeing as kind of a benefit to integrating into design. I was just wondering if you've seen any of those trends.
Carrie, thanks for both those questions. I'll address the first one. Unfortunately, there hasn't been a lot there hasn't been very much built in our market area of those more condensed spaces in downtown areas, you know, closer to or different amenities, those types of things. We still have a very traditional market with the new construction that's taking place. I think the demand's there. There's nobody that's meeting the demand. Let's take the Rosewood Development. And I'm not sure if everybody on here is familiar where that's at, but we're talking off of Whitrock and 16th Street and back in there. Now, it was originally designed as something that would appeal to those that were more senior and the latter ages, later ages in their life, but it's also attractive to professionals that are either working a lot, traveling a lot. Why? Because they're small yards, zero lot lines, and yet they have the benefits of owning a home, but not as many of the outside responsibilities and some nice common areas. You can go up to maybe Plover, and there's some projects up there where they've taken a subdivision, and instead of doing the regular size lots and the bigger yards, where they're more condensed, and they sell like hotcakes. So I know it's a long way of getting to the answer to your question, but I think the demand is there, but it's not really being met. And so there isn't enough there to create a trend because we don't have the inventory for people to buy. and as far as universal design, absolutely. Any of the new construction that you see, you'll see a lot of it implementing, barrier-free type design, nice wide halls, wider doorways, barrier-free from the garage into the home, that type of thing. And it's not just for, like you said, folks that may be aging. Thanks for that question.
JR, I have a question regarding broadband accessibility. When you're dealing with clients, I know you guys service Wisconsin Rapids, but also the surrounding rural communities. Can you talk a little bit about maybe the kind of feedback you're getting in those rural areas? Is there enough broadband? Is there not enough broadband? I know there's several of us on this call that are a part of initiatives and committees helping with that, but if you wanted to touch on that, that would be great.
I appreciate you bringing it up, Angel. It's become even more important with people working remotely. We get people that are coming, into the area, and I'm going to talk now down at the lakes, for instance. All right, we saw quite an increase in terms of people who maybe originally were thinking of purchasing a second home there for future retirement or recreation at this time. But now with the increase in working remotely, and can't remember who on the call said that they had a friend that they only have to go into the office 3 days a week. But now people are like, I'm going to work from my lake house, right? And so one of the top things on their list is high-speed internet, and that's got to be something that's available to them. So we also have seen an increase in the number of people that want to have some acreage with the homes that they're purchasing. And again, that's risen to the top of the list because they need to be able to work from home.
Thank you. Does anybody else have any other questions for JR?
Sean, you look like you were about ready to say something. No?
All right, well, at that, I will end our session for today. Again, thank you everyone for attending, and thank our sponsors today, Coldwell Banker Stewart Realtors. JR, if you do not mind sharing the presentation with me, and I will certainly share that with the recording link to all of our participants on today and those that did register.
Well, thank you, everyone. Yeah, really appreciate the opportunity to share some of these thoughts and this information. It's great to see so many people on the call this morning. Thank you for all that you're doing to make our community a great place to live.
Thanks, everybody. Have a wonderful day.